Bhaiya is now joining us. He's Managing Director and Fund Manager at Aequitas Consultancy. Siddhartha, great to have you with us here. Good afternoon. Appreciate your time. The last time you were on, we spoke a little bit, actually, quite a bit about the macros. And, you were talking about financial history and you're talking about how rates this high always cause some damage. But from then to now, there has been that Fed meeting and the entire mood has changed, right? Everyone is now convinced that the hiking cycle is done and in 2024 we will get cuts. So, it's almost as if markets will go scot-free without the consequent pain of 450, 500 basis points of rate hikes. Is it possible, Siddhartha? What's your sense?
Hi, good afternoon, Prashant.
Good afternoon. Good afternoon. I can hear you. Go on, if you got my question.
Right. So I think, Prashant, I wouldn't, say that the macro news since then has improved definitely in the last 1 month, whether it is on the geopolitical front or on the interest rate front.
So that, what we'll do is...
Fact of the matter is the markets have also gone up.
Yeah.
My concern is more so...
So that just one minute. We'll just fix your video. There's some issue. We will just fix that and come back to you in the next 30 seconds, hopefully. Let me just use that time to just look at what the market is doing because, things are... Actually, advanced decline is still negative. The Nifty has come up quite a bit from the time that we started the show at 2:30. We're up 23 points, but from the lows, that's about 60, 65 points. The low right before when we started. And what's doing well is GMDC and names like CG Power, Tube Investments, Murugappa Group names, right? Companies are doing very well. Nitin Spinners, Viatech Vabag, there's Shanti Gears, Zaggle, which is, of course, the recently listed company, 261 now on Zaggle, and many more. Sterling and Wilsa, which Yash, of course, was talking about with that order win. But I think Siddhartha is with us. Siddhartha, go on. Take it away.
Sorry. I think so, Prashant. More importantly, my concerns were more around valuations. And as I said, while there's been a pause, whether we're going to see a rate cut in interest rates, that's something, let us decide in the future. But yes, domestically, the macro, everything looks good. But then, so are valuations very expensive. So the stocks are currently right now are priced to perfection, right? There's no room for error. Any bad news and stocks could get hammered. So I'm very cautious at this point in time as far as the markets is concerned.
We got the earnings season which got wrapped up and generally the view is that top line growth was sluggish across, but profit growth was pretty strong.
Yes.
Did you sort of take a closer look at what the performance was, not just in the Nifty, but the broader universe? And the mid and small caps?
Earnings growth has been very strong, right? Corporate profitability is at record high in terms of percentage right now. So yes, I think the earnings growth was good. But then look at where the markets have gone. The small cap index is up nearly 35-36% over the last 6 months, right? And I don't think so. Earnings have kind of grown at 35-36%. So you're seeing massive P rating across the board. And that is what honestly concerns me.
Siddhartha, in our last conversations, you did indicate that you've added financials for the first time in the last 1 year.
Yes.
What have you made of the recent moves by Reserve Bank of India? First the warning, then the tightening of screws on unsecured retail lending. How much is it going to hurt growth, margins? And therefore, does it change your assessment or the kind of expected return from financials in the next 12 months?
So, Rima, to be honest with you, we had taken exposure more to the B2B lenders rather than the retail lenders, right? Okay. But the fact of the matter is some of the large cap banks have now actually started are looking very attractive. Right? HDFC Bank at 15-16 times earnings or even ICICI Bank at, less than 15 times forward earnings. Looks very, very attractive. So I think, and even if you look at it, the Bank Nifty over the last 6 months has kind of delivered negative returns, whereas the small cap and the mid cap index has delivered 34-35%. So the overvaluation that was there on the banking stocks to a large extent has got corrected. And I feel they probably represent value at this point in time, particularly the large cap private sector banks.
Siddhartha, hi, good afternoon. I I guess that was the easier part of Rima's question. I guess the trickier thing is, looking at NBFCs, because A, they're very diverse, lending to very different segments. There are new IPOs coming in the market. We were speaking to the FedFina management this morning. And then there's all of this, heightened caution that the governor keeps, giving out. Again, he said the banks need to look at the lending they're doing to NBFCs. Again, he reiterated that point even today. Now, are you looking at NBFCs at all? If yes, then how are you filtering out stocks?
Definitely not. See, I'll be very honest with you. For a majority of their, it's only the kind of P rating we have seen for NBFCs over the last 7 to 8 years. Typically, historically, most of these NBFCs used to quote at 0.5 to less than one time book value. Today, and at the peak in 2020, most of them started quoting at 8-9 times price to book. So we are away from that. It doesn't fit within our valuation range. Most of the lending that they do is unsecured lending, which is high-risk lending, according to me. It works very well when the economy is doing well, but unsecured loans and lending to microfinance or, what is microfinance in a bull market is subprime in a bear market. So we'll stay away from that sector for sure. Not at these valuations. Maybe sometime in the future, we might have a look at them.
Okay. But last time we spoke, this is specifically about microfinance or NBFCs? Because you said last time we spoke and you said you'd added some financials, right? Yeah, we had added financials, but this is more like B2B financials, right? Okay. Financial companies which are lending to the infrastructure side of this sector. Okay. So I guess you can guess the names now.
We're doing that, but since you mentioned it, I have to ask you the question on infrastructure itself. Since you're interested in picking the lenders, what about picking stocks in the whole infrastructure and industrial complex itself? And what's your take on the valuations there? Because they've had a good ride as well.
See, we've been very bullish on that sector for the last 4-5 years, to be honest with you, right? And that's one of the reasons for our massive outperformance. It's been infrastructure, capital goods, and manufacturing. Right now, the valuations are very expensive, right? Again, the growth story looks very good. The kind of order wins that you are seeing every single day that are getting announced, I've never seen anything like that before. But the stocks at this point in time, again, so that we don't capture any downside risks. Look, what happened in Uttarakhand, with the tunnel thing right now, right, where 41 workers have been trapped. This could be any infrastructure company, and it could possibly lead to bankruptcy. So if you are there and if you are executing the project, then the damages and everything can be fairly significant if you are there. So right now, to me, infrastructure cap goods, we continue to hold them, but they're priced to perfection. They're really, really priced to perfection at 35-40 times earnings, while earnings growth and outlook and order book and visibility, everything is very strong, but there's no room for error.
But would you look to bring down your holding in infra capital goods since they are priced to perfection?
See, Rima, we are marginally trimming up positions as stocks keep on, going up, but nothing major, to be honest with you. We're sitting on 10 baggers and 15 baggers, so we really don't have to worry about. We bought them with a lot of margin of safety.
What else are you buying with a lot of margin of safety right now? Where you think there is a lot of margin of safety?
There's nothing available with margin of safety right now.
All right. Just one more question. You spoke about B2B lenders. There is this new IPO, IREDA, which is a financier of green energy projects, PSU and private. Have you looked at it, and what are your thoughts on it? Is it a subscribe? To be honest with you,
we don't do IPO, so we haven't looked at this. But once it gets listed, and if the valuations are attractive, we'll definitely take a look at it.
That capital goods infra, you said manufacturing, if I throw in that theme, CG Power, right? Yes. I don't know if you've looked at it. You must have looked at it. It's up 50 times since the Murugappa Group takeover 3 years ago.
Yes.
What's the view?
No, I think, change of management, great business. Change of management led to a turnaround. And then, the industry and sector started doing well. And there was a massive P rating. And the stock has done phenomenally well for a lot of people. So, yes, we don't own it, right? We own companies which are very similar to CG Power. But again, play on, the power sector. And yes, everything in capital goods is done well, Prashant. Everything, whether it is railways, defense, power, pipes, you name it. And it is, you just talked about Sterling and Wilson also before our interview. So everything in everything and anything relating to capital goods is doing really well right now. In fact, I just realized that capital goods is now the highest weightage in the BSE small cap index. It's taken over from financials. So
wow, that's interesting.
Yes.
So very, very. I mean, if you want to buy, then you got to hold your nose and buy, ignoring valuations. Is that what you're saying, Siddhartha? So if you want to buy fresh.
So again, as I said, we've kind of restricted flows into our PMS.
Okay.
We're onboarding only 3 clients per month because we don't see a lot of value. It's becoming difficult every single day to build a portfolio where you can make a lot of money. There are opportunities, but the opportunities are far and few between.
Just, as we were rounding up the conversation, I was thinking of areas that haven't run up so much and where maybe potentially there is value. And FMCG definitely comes to mind. It's had a quiet 2023, the whole sector overall. Of course, you can argue that even volumes and earnings have been just about okay, just about pedestrian. But your thoughts on the consumer space, if you would look to add anything?
Again, as I said, the valuations are very, very expensive. Most of these FMCG stocks, from the levers to Nestle's, are quoting at 50, 60 P multiples, right? How do you make money buying stocks at 50, 60? And where the growth is not justified, there's at best they're having high single-digit growth, volume growth. So how do you justify those kind of P multiples? I understand sustainability. I understand, you can draw a line and say, okay, 30, 40 years down the line, an ITC or a lever or a Nestle are going to exist and they're going to be more profitable than what they are right now. But I'm here to make money in the stock market. I'm not here to admire the beauty of those stocks. So great companies, but right, but not the right valuation to buy them at.
You'd flagged off media, some of these print companies as attractive buys in our last conversation, citing a pickup in ad revenues, especially pre-election.
This is the newspaper I have, today. It's full of advertisements.
So are you still buying? Is it still attractive?
No, the prices have run up quite a bit, to be honest.
Exactly. So are you comfortable buying today, or?
So this is how a bull market is, Rima. Stocks get discovered very, very quickly in a bull market. Stocks have tripled in the last 6 months. So they go out of our valuation range, and we are sticklers for valuation. So if it doesn't fit within our valuation range, then we won't buy stocks.
Okay. Siddhartha, it's always great speaking with you. Thank you very much for speaking with us and sharing your thoughts.
Thanks a lot, Prashant. Thanks, Rima. Thanks, Urbi.
Thank you.
Bye.
Thank you. Okay, we'll take a quick commercial break here. As always, we'll come back with what's happening in dealing rooms and what Nimish is able to get in terms of the buzz out there. Stay tuned. Coming up.